growth of $10,000 invested. This ETF has return right now is 14,000. So in this video, guys, I'm going to show you how you can invest your money using this ETF and generate up to 9,000 monthly. So which will be enough money to retire today. Again, this ETF has paid. It pays monthly dividends, and it has paid throughout. And not only it pays dividends, but also has a capital appreciation, which is up right now. You can see up to 14,000. Only invested 10,000 in end of 2021. And if we can see here the chart right now, it's Hamilton Enhanced Multi-Sector Cover Call ETF, or HDIV. Right now the price is 16.49. And guys, this is trade on Toronto Stock Exchange. So this is Canadian ETF. So if you're a US investor, most likely you won't be able to buy this. The only way you can buy this is if you're using interactive broker. So if you're not interested, then you can just skip this, or you can just watch for education, or you can see how you can buy this because it's great for diversification. Now we can see it has modest volume because it's one of the solid ETFs, and this 52-week range is between 14 to 17. So at one point it went all the way to 1705, and then right now it came down a little bit. The full name is Hamilton Enhanced Multi-Sector Cover Call ETF, and it is HDIV. The yield right now is 12.41. You can see here the highlight of this fund. HDIV has outperformed the S&P TSX. This is not S&P 500. This is the TSX, which is a Canadian market, because this is it's gauged against the Canadian market. And we can see the yield is 12.41 with monthly distribution. Portfolio primarily a sector cover call ETF with a sector mix broadly similar to the S&P TSX 60, which is also a Canadian market, guys. Modest cash leverage of 25% to enhance the yield and growth potential. So it does use leverage, plus the cover call, of course, of this stock I'm going to show you. And this is a good it's a fit for investor who wants attractive monthly income. He wants sector diversification, for exposure to Canadian market, and you want to increase your growth potential versus individual cover call ETF. So instead of you buying, selling your own cover call, you can just use this one to simplify your portfolio. And of course, if you're looking for higher yield, right? Now the fund objective, the fund seeks to provide attractive monthly income and long-term capital appreciation from diversified multi-sector portfolio, primarily cover call ETF focused on Canada. Since inception, it has returned about 11.47, so almost 12%. But 1 year has returned 2018. Year to date has returned about 9.25, so that's more than S&P 500 actually. So that's a pretty good. We can see I've shown you the chart, and we can see the comparison of the chart here between HDIV to S&P TSX 60, which represent Canadian S&P 500, right? So instead of S&P 500 US, so this is at Canadian 60 biggest companies. The red here, this is HDIV, and then we can see the gray, this is a Canadian market. So it has outperformed Canadian market. And compare yield to the TSX 60, you are getting 12.41 when it comes to yield. And if you invest on the TSX 60, the only max you can get is 3.34. So very little. It's massive difference, almost 10%. If we look at the overview of this fund, it has sectors because it broadly mixed, right? So it has financial 32%, which is a big chunk. Utilities 14. We have the healthcare is 10%, technology is 15%, gold is 11%, and energy is 15%. Now we look at the holdings. We can see it has HFIN, Hamilton Enhanced, the Canadian financial, 21% of that. QMax, which is technology company, it's a US. Most of these are technology companies in the US. So this fund, by the way, is not only really Canadian because it has a lot of US. NMAX, MAX is, that's a gold. HMAX is Canadian financials. AMAX, LMAX, UMAX, and HUT. These are these ETF right here. We can see, I can show you here. HMAX. So this is a fund of funds, and they use these funds, which are in-house funds. So the reason they use this one, of course, they reduce the volatility and reduce the fees because they use their own funds, right? So we can see, if we look at the fund details here, exchange is Toronto Stock Exchange. Inception came out to the market was July 19, 2021. Asset right now has 411, right? So almost 450. That's like a lot of money, by the way. but not as big as HDIV. I made a video. I mean, HYLD has more money, almost half a billion. This is close, getting there. Current yield is 12%. Distribution pays monthly. Management expense ratio is 0, but this 0 doesn't deceive you, because this 0 is this HDIV itself. You're not paying any fee on it, but you're paying fee on underlying ETF, which are these ones here. So that's the difference. Now, risk is medium. The reason I like about this one, look, the first time they paid dividends was in August 30th, 2021. Only, look at this, they only paid 11 cents, or if you round up, is 12 cents. And then they paid 11 cents up to, December. Then from there, it decreased a little bit for 1 month, and then it came back again. And then since then, they've been increasing 12.50, and then we can see it jumped all the way to 13.50, and then 13.50 it jumped to 14. So they've been increasing their dividend, which is a really good sign for a healthy ETF, or especially if it's cover call and they're relying on these dividends. So right now, the last one they paid was 15.10, and then you got this one 16 cents or 17 cents, and they jump all the way to 17.10. So they've paid more, and this increased the yield, so it's pretty good. Now let me show you how you can use this ETF to generate massive monthly income. I have this spreadsheet, guys. We can see here I've shown you the distribution that they've paid. What I did is I just did the distribution, and then I pretty much what I did at average, because we have 14. So I did the 13 months period. We are averaging about 15 cents per share, given if they going with the same rate. But let's say, for example, if it increases, it might go up more, right? Now, if we look at the distribution for just 13 months period, it has paid about $1.89 per share. Current price is $16.49. You are getting with the average yield, with the average month that they've paid, your yield is 11%. Now let's see how you can make a lot of money using that price with that yield. Okay, I'm going little by little here. If you invest $25,000, guys, you're gonna get $227 a month, and that will give you $2,729 a year. So let's skip to 75,000. You're gonna get 8,000 a year, which is 689. It's coming up. Now let's skip all the way to 200,000. That 200,000, are gonna give you 1,819, which is gonna be 21,000 a year. So if you live in a very small, this is not gonna be enough money for you to retire, but it can be a good money to help you maybe pay bills. Now, if you want a serious money, let's say you want 4,000 a month, then you have to put all the way $400,000. And then you're going to generate about 43,000. So if you live in a city like Vancouver or Toronto or any bigger city, Montreal, you won't be able to retire with this. But if you live in like Newfoundland, St. John's, or you live in Saskatchewan, 54,000 will be enough money. So if you're a person living in Saskatchewan or this small city, Manitoba or something like that, then with only $500,000, you'll be able to retire with HDIV, which I can say is very solid, because it's very solid ETF. I don't see going crazy down, because it's diversified and it's very solid. Now, what if you want to go even crazier? Then if you live in Toronto, Vancouver, and if you have $1 million, you're gonna get 109. So let's say, for example, it's your tax advantage account where you don't have to pay any taxes, then you're gonna get a lot of money. Let's say if you have to pay taxes, even if you pay 30%, that still give you about 70,000 a year, right? So guys, that's how you can generate between from 200 all the way to 9,000 a month using HDIV, which is very solid fund. So that's all I have for you today. Just make sure you subscribe on this channel, and then if you like this content, give me a like, because I always give you this type of update. So I'll catch you next one. Bye bye.